Good morning, everyone. Darius Dale here to present our macro minute for Tuesday, November 30th, 2021. Starting with markets, we had stocks down this morning, commodities down, crypto mixed, dollar down, global bond yields down. Big movers today. You got the DAX, the Nikkei 225, and the Russell 2000 index down 2% apiece. WTI down 3%, natural gas down 5%, taking its decline to down 16% week to date. On the positive side of things, you got Ethereum up 2%. So that's good news there. On the economic front, hot European inflation data are being faded by European bond markets. So you got the Eurozone's headline CPI for the month of November accelerated 80 basis points to an all-time high, 4.9%. Its core CPI out of the Eurozone accelerated 60 basis points to an all-time high of 2.6% year over year in November. And then obviously you had hot inflation data coming out of Germany, France, and Italy. Germany hit an all-time high of 6% on an EU harmonized basis. France accelerated to 3.4%, its highest number we've seen since August of 2008. Same deal with Italy, accelerated to 3.8%, highest reading we've seen since August of 2008. Shifting gears across pond, or I guess across the continent there, mixed growth data out of China suggests the mainland economy is on weaker footing than many realize because it could not show demonstrable strength during the post-Delta bounce phase for global growth. So we got China's official manufacturing PMI that ticked up 0.9 points to 50.1 in November. That's the highest reading we've seen since July. But on the flip side, we had the official services PMI tick down 0.1 points to 52.3 in November. That's the lowest we've seen since August of 21. With respect to today's probable range setups, we got an overbought signal in the VIX, oversold signal in the DAX, the Nikkei, the Russell 2000, WTI, net gas, silver, dollar versus Canadian loonie, dollar versus Japanese yen, gold, 10-year bond yield, 10-year JGB yield, 10-year Swiss yield, 10-year UK gilt yield, 10-year Treasury yield, and the 10-year tips break even. But as we said on Friday and reiterated on Monday, don't be a hero. This is not the time to be cavalieringly buying dips in risk assets because the game may potentially be in the process of changing from a dominant market regime perspective. So subscribe if you want the updates on that. With respect to S&P 500, minus 0.7% downside versus 3.4% upside. WTI is at the lower boundary of its probable range with 21% of upside. Taking it back to the Bloomberg dollar, we talked about this yesterday in the chart. We're actually, coming off the upper boundary of the probable range of the dollar. Typically, what we certainly saw this throughout the month of October and throughout kind of, mid August through to kind of early September, the dollar weakness was actually perpetuating reflation in risk assets. But clearly right now we're continuing to see dollar weakness and it's perpetuating deflation. And the reason for that is that we're starting to see the unwind of Japanese yen, Swiss franc, and euro funded carry trades that have really supported this idea of U.S. exceptionalism and floating money into our equity and credit markets here to date. So this is new. This is a very new dynamic. I want everybody to keep that on their screen here. I'm just kind of looking at the chart. Make sure you're aware of that. If we continue to see dollar weakness, it may not actually be a good thing. Then again, this is very new. I'm not necessarily making a call on it yet, but certainly be aware of that changing market dynamic. Getting back to the probable ranges, 10-year Treasury yield at the lower boundary of its probable range versus 36 basis points of upside. Bitcoin minus 5% of downside versus 16 basis points of upside. Ethereum minus 13% of downside versus 14% of upside. And then lastly, gold is at the lower boundary of its probable range with 6% of upside. So with that, Darius Dale presenting our macro minute for Tuesday, November 30th, 2021. Everyone have a wonderful day out there and best of luck.